Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Apple report for Monday, January 3rd, 2023. Before I jump into today's charts, please click like if you would. Each and every time you watch the daily Apple report, it does help us out a great deal with respect to, the YouTube algorithms and people finding us on YouTube. Also, subscribe to the Wicked Stocks YouTube channel. It will provide you notification every time new content has been uploaded. That includes the daily Apple and daily Tesla report, along with other occasional stock picks. And share the content, if you would, with friends and colleagues. So let's take a look. I'm going to start with the big picture as usual. We came off of long-term support about a month ago. I could tell you, I'm looking at a different chart right now, early January. So yeah, about a month ago, we came off this area. On the daily chart, it was a much tighter test. It looks as if we missed it by a hair here on the weekly chart, and we actually did by just a bit, but I'm going to call it a test. And coming off of this, there is a case to be made that later this year, this market can retrace all the way back into the 170s or wherever the channel top is that's presently at 173.54. So that is the big picture. And along the way, we have this intermediate test. One of which we cleared last week. It is the 140.92 long-term descending one-third speed line. I've reduced it to a 2-star level only in deference to 146 even, which is sort of the last threshold from my point of view to settle above for clearly indicating probably in the order of 2 to 3 months from now, 173.41 this channel top. But we've yet to do it. We certainly pushed through it last Friday and backed off to close just below it. It's at 146 even today. It can contain weekly buying pressures, possibly, as I've been saying, through February, and from here we can fall off. In terms of falling off, in terms of indicating bearish continuation into next week, let's say, or into later February, that would come, well, you can see it in part here, 140.92. Closing back below 140.92 would be an indication. Also, I'm adding a new rising one-third speed line that is based in part on last Friday's high. And so that all comes together today. I don't know if we'll see that today or not. I'll get to that in a moment. I'm going to zoom in here just a little bit to show you that daily chart. On the way down today, 143.31 intraday support. That is the high from early last week. I think that was that Monday of last week. I keep forgetting whether we had MLK on, I can't remember anymore. I think it was the previous week. So I get my Mondays mixed up this time of year. Anyway, a week ago, let's just call it 5 trading days ago, we had a 143.31 high. I suppose I could have marked that. It can contain intraday weakness, and above which that 146 even long-term channel top remains in reach today, where we can top out, as I say, not only for the week, but possibly through February trade. Now, if we break 143.31, the high from a week ago, then this 140.45 to 140.92 area is attainable today. And this also, there's a rising channel bottom in the same vicinity at 140.82. So it's sort of, pick your spot from 140.92 down to 140.45. This area can contain selling not only for the day, but into later week. We could round back up from here and retest, not that, but this, the 146 even channel top. But if either of these is to give way, the likelier outcome is to the downside at this point in time. And I say that for a couple of reasons. I'm going to jump actually to both the triple Q and the SPY. This is a weekly SPY chart. I'm going to show a weekly triple Q chart in a moment. I do both of these, daily triple Q, daily SPY, on a daily basis at wickedstocks.com. I appreciate any subscribers to my premium service who watch the daily SPY and daily triple Q report every day. I appreciate your, I'm going to use the word tolerating my showing this premium material, but I think it's an important point to make that both the SPY, the S&P 500 at 411.88 finds long-term resistance this week, and the triple Q in the very low 300 between 300.35 and 304.37 also finds significant overhead resistance, both of which the SPY at 411.88 and the triple Q in the low 300 area can absorb buying through February. So that's why I'm leaning heavily on 146 even, because it's in the same rough zone. And until we close above 146 even, once again, I'm not comfortable anticipating bullish continuation into the second quarter, ultimately anticipating then 173.41 as a 2 to 3 month objective. But getting back to the near term, back to this chart, if we do close below 140.45, not only a good high for the week, but I think through next week and into the middle of February, or all the way through February perhaps, because at the very least, I would expect a 1 to 2 week sell-off to 132.32, this new rising 2/3 speed line. You can see way down in the lower right, I have it weighted as a weekly support level. Hi, if you enjoy watching our daily Apple report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. So closing below 140.45, DP stands for down pivot. That pivots us south through the rest of the week and into next. 135.70 expected within several days, where we can place a daily low. And by the end of next week, 132.32, where we can place a weekly low, possibly bottom out here through the rest of February at 132.32. And it would be a settlement below 132.32 that would indicate another test of the long-term support in the 122 handle, 122.04 to 122.60, within another 2 to 3 weeks of doing so. Now, with respect to the upside, if we do close above 146 even today, well, let's talk about the upside in the event of pushing or opening above 146 even. Last Friday's high was 147.23. We have a series of minor points that have been carefully chosen, all of which can snag a meaningful intraday activity, well suited for aggressive day traders who are looking to grab, 1 to 3 points in Apple. If we open above 146 even, 150.16 is in reach today. And then closing above 146 even, 2 to 3 month target in the low 170s. Along the way, I'll show you that we would have a 1 to 2 week target at 155.19. This number should be 155.19. It is not today. I'm not quite sure why it wasn't changed, but it hasn't been. It will be tomorrow. Anyway, closing above 146 even. I don't see this continuing at such a vertical pace through the rest of the week, given what I showed you in the SPY and the Triple Q, that there's definitely some headwinds right now in terms of both of those indexes, both of those ETFs approaching significant overhead resistance. So if Apple does close above 146 even, I think this is going to be the better part of 2 weeks before we might reach 155.19. Plenty of play on the way up. 155.19, just mention that it can contain weekly buying pressures. In fact, I think it probably would contain weekly buying pressures. And at that point, we could fall back to this more meaningful 146 even level, and then from there regroup for another rally, ultimately closing above 155.19. So we could get caught in this area for several weeks between 146 even and 155.19 if we happen to close today above 146 even. And then, of course, closing above 155.19, probably about 2 months away from reaching 173.41, where we could actually place a 23 high. I think I've rounded it all out for today's Daily Apple Report. Please click like if you haven't already and subscribe. We'll be back tomorrow with Tuesdays. You have a great day.